All right, good morning, everybody. Today is February 26, 2021, and we are going to be taking a look at gold, silver, the S&P 500, and Bitcoin. And gold is breaking down yet again. We have finally made a brand new swing low. What looks like, because of yesterday's close, which was oh my gosh, how long was that before we had that was the lowest close since July of 2020 on the daily chart. No wonder we are falling like a rock. We are 1735 on the price of gold. I'm expecting more downside, and if we close below the midpoint of this channel, I'm expecting a full retracement back to the bottom of it, which is, let's see, currently 1673, and let's see, how steep is the channel is the question. So 1673, and then the following is, so you're moving about 1 point a day down. So we're going to see how many days it takes to get to the bottom of this channel. We may get caught by something like this cluster of support in this area. However, I'm still looking in this zone right here at this 1630 to 1680 range. And that actually is right below the TD support line from a 9. But we won't pay too much attention to that yet. Silver. Silver looks like it's having a rough day. Silver did have, a really rough day. Wow. I was not expecting silver to crash like this. This is surprising. I was expecting more upside from silver. However, it looks like the RSI is breaking down. We're definitely taking out some previous lows. And where this candle closes, this candle for me, and here I'm going to adjust my yellow line for the first time in a while. And we are going to make it a thinner yellow line. There we go. This yellow line needs to close above, or this candle needs to close above this yellow line. The body needs to be above this yellow line for me not to become a bear. And the reason is pretty simple. We are making a new swing low. However, things are pulling back. Now, this could be off of the news that apparently the U.S. is starting a war with Syria, so that could scare the markets. All right, off of silver, the S&P 500. The S&P 500 is not looking great. The S&P 500 is just made a new swing low. However, it is closing above this 30 period or 50 period moving average, but it is sandwiched now in between the 30 and the 50. That's not a great spot to be, hopefully. And we have activated a short trade right here at the 2 going below the 1. However, this is a bullish looking candle right now. If it can close with a green body, that will be extremely bullish because that will be a hammer candle, which would be a reversal candle off of this correction. Still bullish on the S&P 500 at this moment. Now, let's go take a look at Bitcoin. Bitcoin is looking very, very strong on the daily. This candle so far, we have 8 hours left in the day, but this candle is looking amazing right now. If it closed where it's at right now, I would say this correction is potentially over. And I would say 44 was our bottom. So looking for a move to at least retest the top of this channel. Now, I did say that the minute we started trading below this line, I became a bear. If we traded below this line and underneath the channel and inside the channel, I'm more bearish than bullish. So structurally, I'm more bearish. However, the candle right now that I'm seeing is making me more bullish. If it can hold its price for 8 hours and not create anything like a giant shadow from the top that pushes the price back down, I'm going to maintain that this is a bullish pattern And as soon as we start trading tomorrow's candle above the close of this one, I would think that is an entry for a long position. Now the 4 hour. The 4 hours, the 4 hours not been great about calling bottoms with the TD sequential. It did catch this bottom. However, this entire area right here has been consolidation. One of my main concerns, however, is the fact that we have made a swing low on the 4 hour, but we have made a new closing low off of this 4. We are reversing right now, but this is what I was expecting. This is actually what I really wanted to see, which is you make a lower low, but the RSI diverged. Now that I have divergent RSI and a lower low, I think this pattern looks extremely bullish to me and could potentially knock us back to the top of this channel. However, I have no idea when that time period may occur. It could be through the weekend. It could be at the beginning of March, maybe the first or second day of March. We could be back into the 55, 56 area. Now that is predicated on us, and I'm going to remove this because we don't need it right now and it's cluttering the charts. That is predicated on, and the lines are going to start getting adjusted, us not breaking below this green line, us breaking above this yellow on a closing basis, and us trading above this red. Now this red line, I am actually going to adjust and ask for a close that is higher than these candles. If I can get a body close on the 4 hour higher than this red line, that will make me bullish. And the reason for that is simple. The close is what's mattering to me more than the intra-swing prices. And I'll give you a good example of that. This candle looks so bullish to me, not because it swung down so far so fast, but because of where it closed at. There was so much bullish pressure right here to buy that it held the price even with a massive wicking crash. This should be a green volume candle. And yes, we did go down after that. However, we held the price multiple times. If there was actually buyer pressure, so if the market value hadn't been so overbought and there was actually buyer pressure in this area, we would have probably bounced and made an all-time high from this. However, the sellers were starting to take control, and it looks like their control has petered out on the 4 hour. Now we may make one more low, but if we do end up making one more lower low, I'm actually looking for it to not break this low on the RSI. So I'm looking for the RSI to be somewhat higher. And then that is going to tell me that this little correction area is over and more upside is coming. But have I walked away from the odds of going to 40,000? No, not really. I think we can still hit 40K pretty easily. And I'll just take the wick to wick, and this should be about 40K. Yeah. So that 1618, that retracement that we're going to need to hit, this 1618 is probably where it's going to be at. The red candle right here, or the red horizontal that I have right here, the reason it's placed where it's at is because it's above the 236 as well. And if you've played with fibs for a long enough time, you'll start to notice that there's like certain ranges that you do need to get above. Usually when you get above the 236 on a fib chart, it means you're probably going to challenge the previous high at the very least. And you may make a double top and get rejected, but that's not entirely a bad thing. So looking at the structure right now, I'm not too concerned. We may be making something like an inverted cup and handle. If that's the case, we should see a pullback down here. And then our target goes from 44 to 51, which I think is overextended. I don't believe we're going to go down to 36. 36 seems like a huge stretch. 37, I don't think we could hit that area. I don't think there's enough. First of all, on the 4 hour for sure. there's not enough room to the downside to really hit that area without some serious economic problems. So I'll be paying attention to that. The 1 hour. The 1 hour is looking really good. The 1 hour actually just gave you a long trade, which is this 2 going above this 1. You did have some divergence on the RSI on the 1 hour, which is calling for this. This has traded above this previous swing, also a bullish indicator. So I have a lower low, lower high, higher low, higher high. Perfect. That is a reversal in the 1 hour on the market structure. You can see that this candle or this pattern right here, this triangle pattern that I had drawn, did break to the downside. So we're going to invalidate that. And now we're going to start looking to where to move these lines. Well, I think if you take out this low, we start to have problems. And I think as long as you can get above here, which is going to act as strong resistance, and you really just need to be above this area right there. Anywhere you can get above this 128 period moving average on the hourly chart, that's usually going to signify that you're good to go. Now, this 50 period, or it's a 30, this 30 period moving average is rejecting the price a little bit right now. I'm hoping for another 3. The volume's been really, really rough. There hasn't been really much trading going on, and I'm not exactly sure why. The MACD is definitely trending to the upside, but it is pretty negative. However, it's not as negative, if you note, as this previous one. So we've actually diverged on the MACD as well as the RSI. So we've diverged on both the indicators for a bullish divergence, which is great news. Now, target-wise, the 1 hour is still going to give you the same target as I just drew on the 4 hour. Time-wise, I think we're okay still. We may have one more leg down, like I said earlier. I'm still looking maybe at 40 to 42 as a potential bottom before a huge run to the upside. Now, that's not a 40% correction, which is what's necessary for an actual bull run. But the previous few times that we've done this, and the last time this happened was at 42K and we went to 30, we didn't really pull back to the area that was necessary to consider that a full correction for Bitcoin with maintaining a market structure that's bullish. And I don't think we're going to do it again this time. The timing's kind of wrong. Like March is still around the corner. We haven't even hit June yet, and June is usually where we see a huge correction. We're in this weird non-traditional area where the price usually doesn't correct a lot. And so I am expecting some, like maybe towards April, we might see some form of a larger correction, but nothing above 40 or 50%. So I'm still not concerned. This is looking very bullish to me. It's looking very bullish because of the indicators, not because of the price. The price is still looking a little bearish. But my tolerance is pretty high here. We really have the daily chart, which is my bread and butter at this moment, telling me that this may be, we may be looking for a bounce back into the 50,000 area, and a strong enough bounce to actually close up there. So I do think if you didn't get out of your position on this 3 candle that came yesterday, there's still a chance to get out of your position tomorrow. If you need to take some coin off the table because you're leveraged or something like that, you may be able to get out at break even. Now, I don't play with leverage in Bitcoin for a pretty good reason, and it's because of stuff like this. These types of corrections will wreck you and will wreck your wallet. All right, that's everything I have to say, and I will talk to you tomorrow.